I think that if you're a short-term macro trader, like you're thinking in terms of hours or days or even weeks, you're really concerned about that question. But I think that if you have a time frame of 4 to 10 years, I think there's a different question, which is why are the interest rates going up, and what is the macroeconomic environment? I would say you probably shouldn't even buy Bitcoin if your time horizon is less than 4 years, because you're a trader. And if you're a trader, you're probably not going to care about anything that I have to say. You're just looking at whether it's correlated or uncorrelated, and throwing lots of money around without thinking about it. I think if you're really a deep thinker or a macroeconomic investor, the bigger issue is we have monetary inflation. The money supply, or the currency supply, is expanding. I think the news today in Turkey was 70% inflation in Turkish lira. We probably got something in the range of 15 to 20% currency inflation in the US dollar and the euro. We've got 40% inflation in like an Argentine peso or more. So what you have is an inflationary environment. We know the CPI, which is a manipulated measure of inflation. It's actually the lowest inflation that one could reasonably measure, I think. It's like 7.5%, 6.5%, 7%, 8% in the US and Europe. And these are 40-year highs. So the CPI is 8%, but the actual asset inflation rate is double to triple that. So the reason that interest rates are going up is because there's pressure on the central banks to get inflation under control. And their one tool to do it is to raise interest rates. But they're not going to stop the inflation, because the inflation is caused by excessive money printing, budget deficits, and the wars and political policies, domestic and foreign policies, and these policies continue. So given the fact that we have an expansive currency environment, and what you can see is the price of food and energy and scarce resources keeps going up, the question really is, if I have some money, what should I invest in? And the answer is, you don't want to hold currency, because the currency is collapsing in value. You know, the US dollar's lost 99.7% of its value over 90 years. I mean, and that's the winner. The losers are losing 99.9% of their value over 100 years. So the currencies are all collapsing. So I don't want to hold the currency. I don't want to hold bonds, because bonds are currency derivatives. I'm going to basically, you're going to give me $1 million, and I'm going to give you interest on the $1 million at 3% for 30 years. Then I'll give you the $1 million back. And in 30 years, the dollars will buy 10% of what they buy right now. So that's even worse. You don't want to hold a value stock that it's valued on cash flows, because if a stock is valued on cash flows without growth, it looks just like a bond. Right? It might be slightly better than a bond, but if the currency is losing 10% of its value a year, and you can't raise your cash flows or raise your prices, you have to increase your cash flows 10% a year to offset a 10% currency collapse, right? So when the currency is collapsing at 70% a year, like Turkey, the company you own has to raise its prices in Turkish lira 70%, you have to raise your prices by an amount such that your cash flows would increase by 70%, so that you hold parity in value. So equities are currency derivatives, partial currency derivatives. Bonds are almost complete currency derivatives. Commercial real estate is a partial currency derivative. The currency is currency derivative, right? It's a full currency derivative. So what do I own? And the answer is, I want to own scarce property, scarce desirable property. What is it that you own that an affluent, intelligent person will want to buy from you in a decade? That's the question you have to ask yourself. So if you're owning things that will last a decade, right? I mean, if you buy a car that's not going to last a decade, it's not really an asset, it's depreciating. But maybe you own a sports team or a Picasso painting. I don't know. Will people want to buy gold from you in a decade? Will they want to own the building that you own in a decade, right? Will they want to own the intellectual property rights? Well, it all depends. Bitcoin is scarce desirable asset because it represents digital property. If I own $1 million worth of buildings in Moscow in a decade, who's going to want to buy them from me? presumably affluent, intelligent Russians. But will an affluent, intelligent British person or Chinese business person or American want to own that asset? The same is true. You own $1 million worth of buildings in Nigeria. Who's going to want to buy them in 10 years? Who's going to want to buy what you own?